Hey traders, Nick here looking at earnings for the banks. They start tomorrow morning. Well, I think a couple of small banks already reported, but the big ones start tomorrow. Okay, so usually the banks, I do a little video just to share my opinion as far as nuance, how I can play this. They've been very frustrating. I think they're cheap, but they have been cheap and getting cheaper. I think I'm more comfortable, not I think, I know I'm more comfortable selling puts in them than actually buying upside hopium. So the general message is I looked at the open interest, and this is basically what the options already have as far as this week and next week in place. So think of it as what the market is betting on. And the way I interpret it, I see more downside potential than upside hopium. Meaning if they rally, they will need a really good reason to rally. So the reports have to be strong, and more importantly, the guidance has to be sure-footed. You can't have measly, piddly crap statements from management. Well, you know, we did great, but you have to say, I did great, and I'm going to continue doing great for them to rally. That's my opinion. There is downside pressure from all of them with very mild support. And very little upside pressure from many of them with pretty significant resistance. So if I look at what's in there, what everybody's expecting, they're not expecting much, but therein brings the blind side. So I've had some profits in Citigroup, for example, and Bank of America. I'm not going to add to them. I have losses in Goldman Sachs. I'm not going to add to it. I'm going to lock it in, meaning I'll buy puts to say, okay, if it falls big time, then I'll be with the losses I have now, but if it rallies, I may break even and maybe eke out some profits. So I'll share my opinion individually on these, but timing is everything. So I can play the ones reporting tomorrow, or the better idea is to play the XLF as a blanket because it will hold its values better. If three banks fall, they're all going to fall, but the banks that are going to lose, like if I buy calls and they fall, the calls I buy in the banks reporting tomorrow will just plain disappear. But to play tomorrow's banks instead of buying tomorrow's calls, I would buy next week's calls in other banks that haven't reported yet. So for example, Bank of America doesn't report until Monday, I believe. Double check that. So to play Goldman Sachs or to play Citigroup, I'll buy Bank of America calls if I wanted to bet upside. Then if Citigroup disappoints, it falls. The calls I bought for Citigroup will be dead completely, zero. I can't salvage anything, pretty much. Whereas if I bought calls for Bank of America, there'll be losses, but they won't be wiped because its event is still next week. So the implied volatility for that bank will offset some of the downside price action in the premiums. So I will have something to salvage. And will also save me from the knee-jerk reaction down and then up. Sometimes they sell them down and then they realize, oh, no, wait a minute, now they're too cheap, and then they buy it back up. So that's the tricky part. Look out in time and play the ones that haven't reported. So I think the first slew of reports come from, well, first of all, today is green, and this is the S&P. Bullish day, big bounce, strong statement, all-time highs from FANG. Most important candle today, whoops, where are we here? There we go. Most important candle in this person's opinion is Google. Why? Because this is a huge move on Google, 2%. FANG is big up, except for Netflix because it had to downgrade. So why is it the most important candle, in my opinion, in the whole market right now? Because of this. Boom. Boom. And this. If they miss it again by a hair, the bears will get their claws out on Google. And we'll have another one of these. If they blow through it with strength, then 1300 probably is the next stop or more. I'm long Google. I have had profits and losses there, but it's a early lottery ticket for earnings, so I'll stay in it for now. All right, back to banks. So let me look at the schedule. So JP Morgan, Citigroup, Wells Fargo are the three majors that report tomorrow. PNC, I believe, also. So this is JP Morgan. This is a daily chart. JP Morgan is a perceived as the premier bank, great management, etc. It has had a bit bad fall, but this pattern is an inverse head and shoulder-ish, provided they break this level. So if they break 108, let's say they go to 108.50, it could invite buyers. and the technical upside would be somewhere around here to here. It depends. I look here. This is where they fell from before, so they probably go to here first. Now, earnings, let's see the habits. The short-term reaction on earnings is a complete coin flip, regardless of how good of a bank they are. If they give me the P&L right here, please understand that. If they give me the P&L right here, I couldn't tell you how the market is going to read it tomorrow. I couldn't guess the direction, okay? So earnings up, earnings down. So that's 50-50 so far. Earnings up-ish, earnings meh, down to flat. So it's a complete coin flip, right? So JP Morgan, long term, if it falls, I will sell puts with both hands. Okay, that's one of them. Citigroup is a major bank, obviously, and majorly traded too. You can see similar patterns. There's a neckline they're trying to break through. Higher lows knocking on the neckline. Same with JP Morgan. Higher lows knocking on the neckline. If they break it, then they could hit the 70, which is a big accident scene. Look at that. Okay, and then they could go, even higher once they break this one. But this is a neckline that dates back a long time. Look, I'm going back in that red line. I don't know where it goes. I'm going to go to weekly. So to start this messing around. Okay, weekly is not big enough. So this is a not potentially. It is actually. Whoopsies. This is actually a pivot point. So if I draw a line right here, which is about where we are, it's halfway for this box, right? So they're fighting over the box. Again, if this falls, I will sell puts. I have profits and sold puts at 55. So I can't even see it in here. Oops, that doesn't look good. So I'm trying to show you where the 55 is. Well, it's well below. Okay, so there we go. See where I'm hiding? What kind of a market is it going to be for me to lose money down here? I am profitable in it, so I'll stay in it. I'm not going to add. Maybe I'll trim some profits. Okay, so that is Citigroup. Let's see, Wells Fargo. Did I do Wells Fargo already? No. That's the black sheep of the family, although it's the only one that actually made a move. And I thought they would go higher, but they didn't. So once somebody makes a move, they come back to revisit the neckline from which they broke out. So if I'm looking at it this way, technically speaking, not knowing what this is chart-wise, this was a neckline, right? So they broke out of here, and then they go back to revisit the footing. So this is the footing. All of this is footing for me. Rubber band, not hard line in the sand. So upside target, yes, it could see 58. But then again, it's a binary effect for the short term. Technically, if I'm going to go long, bet long on any of them, this is probably the one I would, because it's hated. All kinds of skeletons in the closet, but everybody knows about them. So if anything, it's going to be some upside surprise saying, okay, you've had all these skeletons, but look what we're going to do going forward. We fixed our problems. We identified them. We fixed them. So this has good potential. But then again, the open interest is not conducive for a big rally. I'll share it in the write-up, exactly what it says. So the big message is these banks, I want to go long, but I have very little in the upside potential because of what the markets think of it. But therein lies probably the blind side. So go with your gut. I'm telling you, this is a gut thing from here. The short-term reaction is a complete gut. We don't know what they're going to say or how the market's going to react. Science has nothing to do with it. Fundamentals have nothing to do with it. Look at Caterpillar. They reported an unbelievable quarter, and the company said we underestimated everything. We're going higher, and then one sentence, a mistake sentence by the CFO, killed the whole industry. XLI collapsed from one statement. You can look it up back in time. You'll see it. 1 minute, 20% down. Okay, so we don't know what they're going to say. It's a complete guess short term. But if they sell them hard, I will sell puts hard and I'll share it, because they're already selling at below book or at book. This one is probably 1.4 book, but their PEs are at worst 15. So they are cheap, and if they sell them down hard, I will sell puts for income. Upside hopium is just that, hopium. All right, Nick signing out. If you have any questions, I'll do the same write-ups for next week's banks.